If you want to learn how to trade Forex in 2025, from opening your first chart to placing your first trade to building strategies that can actually make profits, this is the only video you need. I've been trading for 16 years. I started in the 2008 financial crisis when interest in Forex trading was skyrocketing. I've gone from blowing accounts to taking regular profits to buying my first supercar to building my first mansion and being able to retire right now if I wanted to. So I really know what I'm doing. I just hope you'll let me take you step by step to show you the free tools that I use, the platforms that I trade on, where I withdraw my profits, and the exact strategies I use to win consistently in 2025. Now, I don't promise or guarantee any results, but I have helped tens of thousands of traders. So grab a notebook, smash that like button, and let's get into it. So what is Forex trading? Say we have a US $100 bill right here. The value of this bill goes up and down against other currencies and other assets. So if I go into a currency converter here and I type $100 and we convert the US dollar to Canadian dollars, right now 100 US dollars is worth 138 Canadian dollars. So this $100 bill right here is worth 138 Canadian dollars. Now, how do we make money on trading this? So let's say you believe this $100 is soon going to be worth 150 Canadian dollars. That means you think the US dollar is strong and you want to buy the US dollar. Let me show you an example from a trade I actually placed. The bottom of the red box right here is your stop loss. If the price comes to this level, you lose money. And the top of the green box right here is your take profit. That's where you're targeting an increase in price to make money. So on this trade, I made approximately $1,500 because the price when the trade started went in my direction. So you can see the price goes in my direction and then eventually goes all the way up to my take profit, making me about $1,500 in a real trade that I actually placed. And the reason I won that trade is because I believe the US dollar was stronger than the Canadian dollar that day. Now, there's a long checklist of things that I go through when I'm placing a trade like this using something called technical analysis, which I'll show you later in the video. But now let's say you thought the US dollar was weak that day and you thought the Canadian dollar was going to be stronger. So you have your $100 and that Canadian dollar is worth 138, but you think the Canadian dollar is going to be worth 120. That would mean you think the US dollar is getting weaker and the Canadian dollar is getting stronger. So you would want to sell the US dollar against the Canadian dollar, whereas the last time we bought. And that looks exactly like this. The red box right there, if price comes here, that's your stop loss, you lose money. And the green box right there, if price comes there, you win money. You're just placing a bet. So on this trade, I would make approximately $1,600 again, as long as the price came to my level. And you could see right here, price hesitated a little bit and then eventually came down, smashing my take profit right there for $1,600. Now that's the simple approach to how I make money in trading. Now let's get into the platforms, the pairs to trade, when to trade, so that you can start yourself. Now we have to get you on your first trading chart ever. Here, let's just type in TradingView right here. This is the website we want to come to, tradingview.com. It's absolutely free. Click Get Started for free. Click Sign Up on the top right. Put your email in right here, blah, 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 blah. Not a robot, create account. That simple. That'll bring you to the TradingView main page, and don't bother with any of this stuff. Just come over to products right here, click super charts, click your watch list right here on the top right. It's going to be empty at first, and we've got to fill out your pairs here. So what Forex pairs should you be trading as a beginner? You should be trading just the majors. These are pairs with US dollar in them. You can see right here, they all have US dollar in them. These are the best pairs because they're traded the most. The US dollar is the world reserve currency. So there's tons of action, tons of liquidity, giving you the best conditions to trade these pairs. So let's get you set up here. Just click on the plus button right there. Click on Forex right here. I come to sources right there. I'll just select Owanda. You could use whatever source you want. I like to use the same broker for all of my pairs. And let's select EU, GU, USD JPY, AUD USD, US CAD, US dollar Swiss franc, NZD USD, and we have our watch list. 1, 2, 3, 4, 5, 6, 7 pairs. That's enough to start making money as a beginner with Forex. Now, when you're trading, you could quickly go between these pairs by clicking on them and looking to see if there are trading opportunities on any of these pairs. And if there are, you can place trades. If there's not, you could just come back the next day or come back a few hours later when trade opportunities are available. Now we have to discuss, when do you trade? Now, if you're looking at this example, you can see you could trade the Asian session, the London session, the New York session. The Forex market is open 24 hours a day, 5 days a week. But most of you are going to be like me, trading either the London session or the New York session. These are the sessions with the most volatility, which just gives you good conditions to trade. So if we come back into TradingView and we come to indicators and we type sessions, you can click trading sessions right here. It'll actually put those trading sessions on your chart, and we could look at this a little bit closer now. You can see here we have Tokyo. That's our Asian session. That's this block in blue. So all of these candles right here just make up that Asian session. Then you have the London session. That's this right here in orange. And you can see you have the New York session here in green, and that does overlap a little bit with the London session. That is a time where there's a lot of volatility, so a lot of people like to get in here. Personally, I do some trading in the London session, but I do my live streams at 9:30 a.m. Eastern, trading just that New York session. And when you are first starting out as a beginner Forex trader, you want to focus on just one session. So as I zoom in here, you would probably want to start your trading day around here, okay? And then you'd want to end your trading day somewhere around there. So a very small portion of your day, only a couple of hours, and then you can really get a feel for what the market does during this time frame. Now, as a beginner trader, there's going to be a lot of different lessons, a lot of people telling you, hey, do this, do that, do this, do that, and a lot of people are going to tell you, hey, try an indicator, try the super trend. And this is a somewhat reliable option right here, but it's an indicator, so it's not going to work that well. You can see here, hey, look, it told you to sell right here, and that was a good move. It told you to buy right here, and that was a good move as well. But you're always going to want to do your own analysis, your own technical analysis. And I'm going to show you those basics and a complete strategy later so you can start placing trades today. But first, let's get you set up with a trading platform so you can actually place trades. Now we have to get you signed up with the broker so you can place trades and hopefully profit. The way that I do it is I do my analysis here on TradingView, and I place my trades in MetaTrader. To the right here, click on demo, and you can open a demo account so you can get started with practice money. That's the safest way to do this. Then once your account is created, in just 2 minutes, click on trading terminals right here, click on MetaTrader 4 on desktop. That's going to give you an installation file. Just click install, and then you're going to see a platform that looks just like this. Once you're in here, all you need to do is select toolbars. Just make sure your standard toolbar is right there so that you could get your market watch, pull your pairs to your chart. Make sure you've got the terminal ticked, right? So you can see all of your open trades right here and all your closed trades right here, your account history. Now, I told you this is where I do my analysis. So let's say I just wanted to place a sell trade when we broke through the EMA right here, and I felt good about that position. I would grab that US dollar, Canadian dollar chart, because that's the pair I was trading. I would click on new order, and if I wanted to buy, I would select the size of that order. Let's say 0.01. That's a really small size, a good place to start. And then I could either sell or buy immediately using a market execution, or I could do a pending order where I could set the price I want to buy or the price I want to sell. So for example, if this is a level that I really liked right here, maybe I want to place a buy trade from that level like this, okay? So I would look at this line right here and say, oh, and the price is 37701. And so I would set a limit order so that when this price comes to here, it triggers the trade, shoots up, hits my take profit. Now we need to get into the reasons why you should be placing trades. This is called technical analysis. Now I'm going to teach you when to buy, when to sell. These are the reasons to place trades. Okay, but before I do me a favor, go to the links in the description and join my free trading room. I send free trades in here using my personal analysis. You can see I sent this trade right here that won 28.1 pips. absolutely free to 79,000 people. So I'm going to teach you how to fish, but sometimes I feed you the fish too. So where was I? Reasons to place trades. There's two reasons to place trades. You have fundamental analysis and technical analysis. As a beginner, you pretty much want to forget about fundamental analysis. This is GDP, interest rates, that sort of thing. But most of this is actually baked into your price chart, okay? The only thing you really want to know about fundamental analysis is if there's high impact news you don't want to trade that day, and I'll show you how to avoid that. But the main way I make money in the markets is through technical analysis, okay? I'm not big on patterns. I only use a couple of indicators. The main way I'm buying or selling is because of the price chart and the trends. So let's jump right into a price chart, right? You can see at the top we have all of the different time frames. We have the candles, we have line charts. You could select a bunch of different indicators to help you with your trading. For beginners, a lot of the time I suggest an EMA. That's a moving average exponential. Only buy when the price is above that blue line and only sell when the price is below that blue line. It's a simple technique to kind of help you stay into trending markets. And that's a good place for us to start, right? Look, this is clearly an uptrend. Look, price pushes up, it pulls back, impulse up, pull back, impulse up, pulls back, impulse up. Where are we placing trades in all of this? Well, let's start with our first concept, which is supply and demand. This huge push up right there, that impulsive move right there, can only be made by hedge funds, institutions, multi-millionaires. So the base of that move right there is actually a level of demand. If all the rich people told us that they like this level right here, then we like that level too. And we can actually place a buy trade from that level, have our stop loss below the demand, and on this trade we would risk 1% of our account to gain 4.65% for a huge win. Now this brings us to our second concept, which is support and resistance. You could see we have a level of resistance right here. Why? Because price came to that level and it resisted pushing the price down to our level of demand. Now, something we can do in an uptrend here is when price breaks through that level of resistance like it did and comes back to that level, it's now acting as a level of support, giving us another opportunity to buy, right? Because we're always trying to get that pullback opportunity, right? Price pushes up, we want to wait for the pullback, enter a trade. Price pushes up, we wait for a pullback, we enter our trade, we collect our profits. But what about sell trades? Well, let's go into a line chart to just show you this a little bit differently, right? We had the move up, the pullback, the move up, the pullback, the move up, the pullback. We had a couple of wins. Now we get another pullback right here. We're thinking, hey, maybe we'll get into a trade in this area, but price pushes through, right? It breaks through. So you could see this level right here. When this level gets taken out, it tells us we have a trend shift and we could start looking for sell opportunities. Now, where could we sell? Well, let's actually just mark this level right here and pull that across right there. We know that this level was used as a support level. We've now broken through that level, and you can see we're starting to use that level as a resistance level, so we can go short from that level right there, put the take profit above our level right there. And here, look, we'd risk 1% of our account to gain 6% on an absolutely massive trade. Now, trading obviously isn't always this easy, but if you simplify, you will have success in trading. It's the people that overcomplicate that don't do well. And the longer you trade, often the more you know, the more complicated you make things for yourself. So let's go through those concepts again, okay? So you got a big push up right there, okay? Price is coming down, something like this, okay? Let's just do, this is what the market looks like, something like this, okay? This is what the market looks like. So you get the big push up right here, right? You get that huge push up right there. That creates a level of demand. So we'd be looking to go long right here, and we'd be looking to collect some profits. Now this level gets again. So this demand level is also now a support level, and we can win another trade off of that level right there. And since we're in this uptrend, we're really just looking to buy, right? So what other opportunities do we have? Well, we have a level of resistance right there, don't we, right? This level was used as resistance on multiple occasions right here. We broke through that level and closed, and now using that level as support, we're able to get into another long position right there and collect our profits. Now, obviously, I'm going to drill this down even further when we get to the complete strategy portion of the video later on, but now I want to briefly get into trader psychology. It's really important. Okay, so I'm not going to ask you about your childhood here, but we do have to get into trader psychology a little bit, all right? There's only a few things I really want to get into here. The first thing is, are you a contrarian thinker? Basically, do you have different opinions from the people around you? If you're just following what other people are saying, you're not going to be a good trader. We are betting here. So when everyone on the news was saying, don't buy Bitcoin, and you were saying, I think Bitcoin was a good decision, you would be betting on Bitcoin. And if you did that, you would have made a lot of money. But if you're just kind of following along with what the media is telling you, what people in your life are telling you, then you're not going to be a good trader. But if your family is telling you, don't do this, don't do that, don't do that, and then you're doing some of those things, as long as they're not illegal, then you're in the right place. Let's continue on to the next one, which is avoiding political bias. I have seen incredible trading careers get caved in, completely collapsed by political bias. You're probably thinking, how is that possible? And what I'm telling you is, do not identify as left or right. You want to be in the middle. The only way you want to identify is as a trader that's trying to make money. The reason for that is because if you hate whoever the president is, you're always going to think, oh, the US dollar is weak, right? You're going to have a bias. But if the technical analysis is telling you, hey, the US dollar is actually strong, we should be buying the US dollar, then you should be buying the US dollar. Who cares who the president is? Just focus on the charts. And if you can do that, we come down to the last one. Are you a gambler? Do you have a gambling history? If you do, no, stop trading. It's that simple. If you can't control your emotions, you're going to trade too often. You're going to make mistake after mistake after mistake after mistake, and you're just going to blow your money. You're going to waste your money. So don't do that. And so if you have all three of those things, psychologically, you can be a profitable trader. And I hope that I'm part of that journey. So again, click the link in the description, join my free trading room on Telegram. Now let me give you my complete trading strategy for 2025 you could take to your charts tomorrow morning and start winning trades with. It's what you've all been waiting for. I'm going to give you my full 2025 trading model in the New York and London session. Let's start in New York. Step number one right here on the M15 time frame. We're looking at this candle right here, right? 9:30 a.m. This is the New York Stock Exchange open. This candle is moving up, it's moving down, and then it's done, right? 9:45 that candle closes. During that time, it creates a candle high and a candle low. That acts as our range bottom and our range top. That is this line here and this line here, and then we have our opening range. So let's do that on the chart. You could see we have the candle right there, 9:30 a.m. Eastern. The price goes up, price goes down, and then it's finished. We mark the top of the range by this wick. We mark the bottom of the range by this wick. And to make this easier for you, just come down right here. Make sure you're UTC -4 New York, and come to indicators right here. Type opening range and select this indicator right here, and then just select edit right here. Time period, you want that 15 minutes, then you want the custom range 9:30 to 9:45 UTC -4, and that's going to put it on your chart for you so you don't have to draw it every single time. All right, let's start moving to that next step, right? The next step, we come to the M5 time frame and we're just monitoring. So at the top left here, I'm selecting M5. Now I'm monitoring price, okay? I'm just waiting to see, what is price going to do? Is price going to break out the top or the bottom of the range? This is going to give me my decision. This is what I'm going to use to tell me if I'm buying or selling on the day. So let's move to the next step. We're still on that M5 time frame. We're watching the price. Look, price breaks out the top and the candle closes. That tells us we want to buy. We want this to be in line with the overall trend direction too, okay? So this is exactly what we're watching now. Are we going to get a price broke and close above the range right there? That tells us we're looking for buys. But where are we going to get into the trade? Well, you can see if we look to the left, you always want to look to the left. Look, we've got a level of support right here. You could see price was held up multiple times. So that could be an area. But we also have a huge push up right here, right? Creating a level of demand like I showed you. So on the red candle there before the big push up, we have a demand zone. You can see I also have my moving average there. We want to take buys above that moving average. So this live trade that I actually took, I set my buy limit order right about here, had my stop loss somewhere below this level right here, and I targeted all the way up here. So when price comes to this level right here, it automatically taps me into my trade because I used a limit order. I showed you how to set up a limit order earlier in the video, and then I'm just waiting for the price to come back down to my level. You could do this while you're watching the computer or not. And right there, you could see the price tapped me in. I got a good reaction to my demand zone level right there, and then price started to push up, and eventually at some point here it went all the way through and smashed my take profit right there for a massive win. So if we go back to the trading model, we're following all the steps, right? There's different ways that we could enter. We could enter right here. We could enter at the retest here. We could enter at a fair value gap, at the range midline, but I like to enter at demand zones, right? So we moved to the next step. What did we do? We had a pullback to that level of demand. I put my stop loss below there, I showed you, and then I took my take profit and we won that trade. Sometimes also I'll do a partial profit right there. If you want to get into those more significant details of the trading strategy, come check out my live trading stream every Monday and Wednesday here on YouTube. Now let me show you the exact same strategy, but on a sell trade I took during the London session. Look, 15-minute time frame. We're watching the candle right there. Boom, we've got the candle top. We've got the wick bottom right there. That's the range top and the range bottom. So this is our trading range. Now to do it in London, all I do is I make sure that I'm on UTC here, and in the settings of the indicator, it's still 15 minutes, but I set my custom range to 8:15 UTC plus 0 because that's the beginning of the London session. So after we got the range, you could see I come to the 5-minute time frame, and then I'm watching the 5-minute candles. Can we get a close out the bottom? Yes, we absolutely can. So we get a close out the bottom right there, but it wasn't a significant push. So on this one, I actually waited a little bit longer. I watched the candles. I didn't take a trade. Now I could have took a trade and I would have been fine on this one, but I waited for a more significant close, right? And that's what we get right here. This is a more significant close. We get a more impulsive move, and on that move down, we create a big level of supply on this green candle right there. It's always the green candle before the big push down is our level of supply. Now that supply is a little too big right there, so I started to look left. Okay, I look left and I go, where else do I have a level of supply or a level of resistance? And you can see right here, we had a pretty clear level of resistance if we pull this all the way across. Why? This was resistance here. This was resistance here. So I thought, hey, we might resist at that level again right here. After we got that push out, we'll come back to that level. That'll be a good place for us to enter our trade right here. And it's important to focus on this recent price action. If you scroll too far and you start looking over here, it's not going to impact the markets as greatly, okay? The closer the price action, the more likely you're going to get a really strong reaction. So we've had that break out the bottom, so now we want to sell, right? That's the first indication we want to sell. We've got our trade on the chart right there. Let's go ahead and play out this trading position. We're just waiting for it to come back to the level, and then it's automatically going to trigger us into the trading position as soon as it taps into that level of supply. You could see it tapped in right there, went against me a little bit here, and then started to push down. That's exactly what you want to see. That means you have a strong level of supply, right? Strong level of supply. And look at these huge red candles that I saw after that and smashed my take profit right there for a huge win of 3.21%, risking just 1% of the account. And obviously, hey, if the trade comes up here and hits my stop loss, I lose 1%, I lose the position, and losses do happen in trading. And they happen a lot because of the news. I told you I was going to tell you how to avoid the news. Just come to forexfactory.com/calendar right here and just click on this filters at the top right there. Turn all of this stuff off, okay? You just want just the red high impact news, apply that filter, and on a week like this, you wouldn't have traded much. Look, there was big US news here on Tuesday, big US news, big Canadian, big Britain, Canadian, and US and Australian news, big Great Britain, US, Japanese yen news. It was just news all week long, so I took very few trades. And that's how you avoid some of those losses. Now, if you want your trade dashboard to look like this and see this many wins, it's going to take a while, but it's definitely possible. So make sure that you check the links in the description, join my free trading room, smash the like button, leave a comment if you need any help at all. I'm always here. Consider joining my VIP trading room where I send my personal trading signals every single day. Consider watching this video right here, or definitely watch this video right here, and I'll be back next week. Much love.